Welcome to this quick explainer video about the Bank Secrecy Act, a cornerstone of financial regulation in the United States. In the next 5 minutes, we will explore its origins, various components, the requirements for each, and its vital role in combating financial crime. This video is for educational purposes only and does not constitute legal or financial advice. Commonly known as the BSA, this act is officially the Currency and Foreign Transactions Reporting Act of 1970. Enacted by Congress, it was the first major step to prevent criminals from hiding illicit funds within the banking system. Its primary mission is to safeguard the financial system from money laundering, terrorist financing, and other illegal activities. One of the fundamental pillars of the BSA is record-keeping. Financial institutions must maintain detailed logs. This includes records of cash purchases of negotiable instruments like money orders and cashier's checks. Perhaps the most well-known requirement is the Currency Transaction Report, or CTR. Institutions must file a CTR for any cash transaction exceeding $10,000 in a single business day. These reports provide a paper trail that law enforcement can use to track large cash movements. Beyond large cash deposits, there are suspicious activity reports, or SARs. These are even more critical. A SAR must be filed if a transaction seems suspicious, regardless of the dollar amount involved. For example, if a customer makes multiple $9,000 deposits to avoid the $10,000 limit, that's structuring. Structuring is a federal crime and a major red flag that triggers a SAR filing. Every financial institution must implement a written anti-money-laundering, or AML, compliance program. This program must be tailored to the institution's specific risk profile and includes regular employee training. Training ensures that everyone from the teller to the CEO knows how to spot and report suspicious behavior. Next is customer due diligence, or CDD. This is the process of truly knowing your customer. Institutions must verify the identity of every customer who opens a new account. They also must identify beneficial owners, the real people who own or control a legal entity or company. For high-risk customers, enhanced due diligence, or EDD, is required to prevent money laundering through shell companies. The stakes for BSA compliance are incredibly high. Non-compliance leads to severe penalties. Civil penalties can reach $25,000 per day for ongoing violations. Criminal penalties for willful violations can include fines up to $500,000 and imprisonment. Beyond fines, institutions face devastating reputational damage and the potential loss of their banking charter. Regulations are constantly evolving. The Anti-Money Laundering Act of 2020 introduced major updates. This act aims to modernize the BSA, focusing on risk-based programs and better communication with law enforcement. It also expanded the BSA's scope to explicitly include digital assets and virtual currency exchanges. Regulators now encourage using advanced technologies like artificial intelligence to detect complex illicit patterns. FinCEN, or the Financial Crimes Enforcement Network, is the primary agency that oversees BSA compliance. FinCEN collects and analyzes the data from CTRs and SARs to support law enforcement investigations. Sections 314A and 314B of the USA Patriot Act allow for critical information sharing between banks and the government. The BSA doesn't exist in a vacuum. It aligns with international standards set by the Financial Action Task Force. While thresholds vary globally, the goal remains the same: a unified front against transnational crime. However, compliance is challenging. It requires significant investment in staff, training, and modern technology. Heavy regulatory pressure can sometimes lead to defensive reporting, which can overwhelm law enforcement with data. Looking ahead, the focus is on effectiveness rather than just checkboxes. Quality of reporting is key. Financial institutions must remain agile, constantly updating their risk assessments as new threats emerge. Continued investment in cutting-edge compliance technology will be the differentiator for successful institutions. To recap, effective BSA compliance requires robust reporting, thorough due diligence, and a culture of transparency. Thank you for watching. You can read detailed best practices to comply with the BSA Act in our website, www.grctimes.com. The URL is given in the description of this video. If you like this video, please hit like button and subscribe to this channel to view more videos like this.